Good morning all, how are we doing? Silence. How are we all doing? All good? Start off, we got 10 minutes till the market opens. We're going to have a quick look at news before the market opens, see what we've got today, not a lot. And just have a quick look at the Aussie dollars. We had low speaking overnight, so we'll have a quick look at what impact that has had. And then have a quick recap of the indices before the market opens. Morning Harry, morning Andy, morning Bruno. And Profster, Rahat, Diamond, Peter. Anybody else? All here. Presence incorrect. Register taken. So today we've got no news and Franco. Have I said Franco? Did I say Franco? Can't remember. Hello. So we didn't have a lot of news yesterday. Powell shut the market up at 4:30 yesterday, which was lovely. I made about $3,922.52 yesterday. Very nice day, off the back of Powell. Yeah, really good. I was basically got in short as I posted it in Telegram actually. I got in short on a price action setup just before Powell spoke, and he tanked the market. Crazy. It was a really good move. But hey, you have to take these gifts when you're given them. So Aussie, we had low this morning. This afternoon we've got Lagarde, and we've got Jordan at 3:15, and then Mester has just been scheduled to talk at 9 p.m. this evening. He wasn't on the board previously, but he's on there now. So, but the main one I'm interested in today is the SMB at 3:15. Mainly because we've got the policy rates coming up on Thursday. So there is a potential for something to get announced today ahead of that, which could give clues as to any changes that may be happening with the SMB rates. If there are any changes hinted at, that could obviously have a big impact on movement on the Swiss franc today, but we'll see. Maybe absolutely nothing, but that's the most likely thing to make an impact today. But apart from that, there's nothing scheduled. There's no news releases whatsoever. So business as usual, normal market manipulation, nothing exciting really to look at. We got CPI tomorrow, and then we got Bailey and Powell speaking at lunchtime. Then we've got our budget tomorrow in the UK. So there's a fair bit tomorrow potentially happening. But Thursday is the main thing with the SMB rate and PMIs for Europe. News-wise overnight, not a lot. Nothing particularly interesting happened. So, yeah. I think all this stuff you see tweeted now, you have to kind of ignore 99% of this stuff. It's fake news, really. Most of the stuff that's coming on here to do with the Ukraine is just complete fake news. Zelensky is not saying that. I don't quite know where they get all this stuff from. He's 100% wanting to join NATO and the EU. But who knows? So take most of that with a pinch of salt at the moment, I think. Right, so that's news. Nothing particularly exciting. 2022. So I just seen something coming on Financial Juice, which I was going to look at. Right, so the Aussie dollars during the Asian session didn't have an awful lot off of the back of that announcement. The yens, so we've had a big positive day, mainly yen weakness though in Asia. So all the yen pairs in Asia have crept up considerably. So again, more yen weakness coming through. Japan has announced 900 billion annual budget, which is its biggest annual budget ever. So they are putting a lot into recovering from COVID and trying to get their economy back on track. There's solid plans in place, and there's an awful lot of positive potential future developments happening. So I'm not quite sure why we're seeing such a weak yen at the moment. Everything that's coming out of Japan to do with finance is planned commitments to positive movement. So I think obviously the issue seems to be that they haven't enacted any of this yet. There's a lot of plans in place, but obviously plans don't mean something's going to happen necessarily. So we're still seeing very much a weak yen at the moment. But obviously that will reverse at some point. It's just a case at the moment, if you've got any yen shorts on, we're having to sit through drawdowns. So this morning on my CAD yen, I've enacted an aggressive drawdown control position. So we've had this reversal after this strong push. The reason I'm getting into it today, I'm in 5 positions short on the CAD yen. And we've had a very strong push. So we've hit ADR already on this one this morning. So I've got in with aggressive drawdown control position today as we've already hit ADR. So we've put in today's movement quite a lot. We've put in today's movement, average movement. So I've gone in with an aggressive move down here with the stop above the highs up here. I'm not sure exactly where my stop is, but it's above those highs. And I've gone in with 50% of my total lot size to try and get some profit in the bank to do some drawdown control on this CAD yen, because it's not out of hand yet. It's just obviously it's my biggest squeeze at the moment. It just isn't stopping. So I'm looking to try and do something about it now. We are going to come down at some point. This thing, when it starts to move, it's going to find support. It's going to hunt out support. It always does. So it's going to be a big drop, but at the moment it's not stopping. So timing is the difficulty here. We know it's extended. We just can't seem to get any kind of momentum started. So, Proster, I've been off for a while trying to finish some legal docs for my legal age, 18. Congratulations on becoming 18. DAX, yeah, we'll have a look at all the indices. So we've got 1 minute to the open. So yesterday, we had a bit of an accumulation yesterday on the DAX. Let's look at the daily chart. So we've gone into an accumulation on the DAX. We still haven't got down here. I'm still waiting for us to come and retest 14,000. We looked like yesterday we were trying. We ended up with a doji. We've pushed up today. I'm still short. Bias on the DAX at the minute. Same thing with the Dow. We had an inside bar, but it was bearish. Remember, we were looking for shorts yesterday because of the amount of movement that we've had on this thing. We had 4 solid days up. We've got our down day, but not particularly convincing. So again, looking still for short opportunities on all the indices. S&P ended up positive, and the Nasdaq ended up positive. So that's now 5 days on the trot up. The reason we got a negative DAX is because Boeing's price dropped. Dow, because Boeing's price dropped. So obviously that had more impact on that, because we've only got 30 stocks in there. One stock has got a 1 in 30 chance of dropping the market, and it's one of the big ones. So so we had some negative action on there, but these two did not let up. So that is now 5 days on the trot. Started positive this morning as well. So we'll see what happens today, but I'm looking for shorts. We'll have a look through all the FX pairs in a minute as well. And basically, let me just quickly redo the EA on there. So this is a development version of the EA, so it's a little bit different. I've just tweaked some bits and pieces in it. Not sure. Pushing up at the moment. So looking for where we go at the open. I'm looking for a drop at the open really, but we've got a couple of levels up here. We've got basically the last 4 days on the DAX. Potentially we could come up and retest any of those. So obviously yesterday's high is the most obvious one to come and test first of all. So we'll see what happens at the open. We're starting bearish by the looks of things at the moment. So that's yesterday's high there. And then we've got previous day's high up there. So those are the two levels which initially we're going to look to test. Might as well mark the other highs as well. And to the downside, that's yesterday's low. So just be aware of those levels. Opening bearish. Hi, can't say your name. Rojdan Kamai idea. Don't know if that's a name or a statement. So fairly sluggish open on the DAX this morning. So pre-market, we've had a little bit of a bullish movement. So market structure at the moment is long. So potentially we're looking for pullback continuation long. The Dow seems to be going long out the gates at the moment. Nasdaq and the FTSE are all opening up as well to start with. First 5 minutes. 10 seconds left on this candle. Okay. Bearish open. Going short one on the DAX. See if we can get an initial downside movement in. So I'm just using a fairly wide stop this morning. So we can see what type of price action we're going to get. You can't really, there may be a bullish engulfing on M15 chart, but you can't really take that into account. The market only opened 5 minutes ago, so the first 10 minutes of that price action you're looking at is totally irrelevant. The market's literally just opened 5 minutes ago. So any pre-market movement is not really, you can't really count it. If you look at that, two-thirds of that candle is irrelevant. Okay, so just pushing up to the opening range highs. See if we can get reaction at the highs. Okay, FTSE's coming down quite hard. Nasdaq's starting to reverse. Dow's starting to reverse. So all the indices are looking a little bit heavy after the initial open. Still got over a minute left on these candles though, so. Nothing particularly opening with a flurry this morning. While we're waiting for these, let's have a quick look at the ADRs today. So obviously KDR? ADR this morning, obviously the main one is CAD yen. So as I said, I've just taken an aggressive short on this. So we popped up straight into ADR this morning off the back of the Asian session, bounced straight off, reversal alert, retested, been accumulating up into the London Open. So obviously if we get some movement down in the London Open, we'll be looking for some tests further down. This is the main area in Asia to look out for, that accumulation. So we'll see what happens on that one. But yeah, that's really nice. Obviously CAD yen, massively extended. 4 hour, we are off the scale, up practically to 90. We've had literally tiny rests all the way for the last week. So we had an entire week literally solid up. That candle's just closed. The DAX is the only one that's closed bullish. All the other indices have closed bearish. Nasdaq closed with a hammer. A shooting star rather. S&P, Doji, Dow, Doji. So DAX was the only one that actually closed bullish. So we'll see if we get some follow through on that one. So obviously massively extended on the 4 hour. The hourly, we are extended as well. We've been embedded on the hourly for literally 4 days now. Solid. So very, 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 very little rest on this thing. But you can see the speed of movement today. We've hit ADR within the Asian session today. All the other days we've had sort of a little bit of movement and accumulation, a little bit of movement. Today we've had a solid, strong push. So this could well be the final flurry before we suddenly get some kind of yen strength starting to push in, which is why I've got into an aggressive one on that this morning. May or may not work, but it's looking good this morning after this big, strong move. We had a lot of rejection coming in off of it. So we'll see if it's a profit take or if it's going to start to move back down. And US dollar yen. US dollar yen hit ADR early. Big, strong movement there. Again, we had big, strong push up, accumulation, big, strong push up in another accumulation at the moment. We haven't had a reverse alert on this one yet today. That high there, we didn't get an alert there. We put in a new high, and obviously this is the current alert here. So potentially when we get that, we're going to at least come back down to test that, if not there. But we're almost at 125 ADR on US dollar yen already this morning. So big, 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 strong pushes there. DAX is pushing really hard. Stopped out in that position, 0.5%. All the other indices, especially the FTSE. FTSE's coming down pretty hard at the moment. It's retesting the 20. All the other indices indecision at the minute. So just going to let that one run for a minute to see where we're heading. Looks like we might want to come up and test yesterday's high at the moment. We've got all this accumulation here that we're potentially running into now. So we'll just see what happens this morning. I'm just going to let that one run for a minute just to establish a bit of direction, but it looks long. The other indices are going along as well now, apart from the FTSE. The FTSE's coming down pretty hard. Gold, you want to have a quick look at? Yeah, gold's coming down hard. Got weak US dollar at the moment. So we got that bounce yesterday on gold, but we're just sort of sitting in accumulation. Again, it's a 3-day accumulation on this. Nothing's going anywhere. So this is the retest of that reversal alert basically we're looking at the moment. Potentially for longs. Okay. So starting to slow down a little bit on the Dow and the NAS. Okay, big strong bullish open. So looking for pullbacks to see if we can get in some longs to come up and test yesterday's high initially. Not far away. So we'll see if we get some pullbacks to get some entries on. Let's have a quick look at the RSI extensions while we're waiting for something to happen over there. Just keeping an eye on that on my other monitor. Right, so yens, as we can see, we're up in the 85s on the yens, nearly 90s. This column here, which doesn't get lit up very often, very rarely. We've had this lit up a couple of times in the last month, obviously to do with Ukraine mainly. But Aussie dollar yen, again, off the charts at the minute. Same thing as the other yen pairs. Very, very weak yen. We've had hardly any pullback whatsoever. No profit takes on these moves whatsoever. Still going strong this morning. So looking for pullbacks. Really simple, easy level. It's coming down to here somewhere at some point. It's just the timing. We've no idea when this is going to start to strengthen up. Any weakness we see on any of these pairs that are extended, so any negative news, Aussie, CAD, Swiss, Pound, New Zealand, every major basically, anything that gets negative news, we will see some kind of movement starting against the yen. So we're just waiting basically at the minute to see what is going on. But as I say, everything coming out of Japan from a financial perspective is positive at the moment. So just a waiting game. Massively extended, but this thing got extended mid last week. So your entries would have been, initial entries would have been somewhere around there. Very few opportunities to get in short. If you look at the 15-minute chart, there haven't been that many reversal alerts short because it's been so strong. It's been pushing so hard. So you wouldn't have more than sort of 2 or 3 entries on any of these yens at the moment. So I've got 4 on my CAD yen. So yeah, just waiting for a profit take move to commence on these all these yen pairs. Aussie dollar, New Zealand dollar. That's also got nicely extended. Let's get rid of that fib. we looked at playing the bounce off of the 72, which has worked very, very nicely. It's range bound basically at the moment. We've been very nicely trending on this one, but for the last sort of 3 or 4 weeks, we've been range bound on this. So we are now putting in negative market structure. So we're starting to look a little bit more bearish on that. So looking for basically short opportunities really at some point. And obviously we're nicely extended at the moment. M15, we've just had the reversal alert this morning. So there's your short entry on that one. Aussie dollar, New Zealand dollar. Didn't quite get extended enough for me. I'm looking for things to get extended to 75 or above at the moment. So not quite where I wanted it to be. Just got 1 minute to go on these candles. I'm just going to take a long on the DAX. New Zealand dollar yen's just hit ADR. Put a second position above the high. Actually, I might cancel that. Put it above that last candle. So I want to see a break of that high there. Yeah, so Aussie dollar, New Zealand dollar. CAD yen we looked at obviously already. Just got an aggressive position on this one this morning. Very nicely extended. We've hit ADR already today. Obviously they're not stopping, so we're just waiting again on all of these yens. Swiss yen is the same thing. We had really good Swissy strength yesterday, which really kicked the market. We've got just about an ADR hit today on that one as well. Let's whiz through all of these while we're on them. Euro yen nicely extended. We had a big long accumulation on that one. We've just broken out the highs, so that's the next leg. So first leg, second leg, third leg, we're going for the fourth on the euro yen. Not quite as extended though, euro yen now. It was extended last week, but we've had no downward movement whatsoever on that one. Pound yen, same thing, really weak at the moment. Same New Zealand dollar yen, that's already hit ADR, and US dollar yen obviously is up in the 85s. So massively extended. So just a waiting game on those, waiting for some kind of positive move to come. On the yen, apart from that, extensions, we've got 2 euros. We've got the euro odd extended to the downside in euro CAD. Obviously, these are shorts, so wouldn't be looking really to take longs on these down there. Very nice rejection showing on the euro CAD. Probably get a little bit of a pullback, but really, I'm looking for short opportunities. That was the entry on that one. Euro yen, obviously short, same thing. And euro New Zealand's only just got extended to the downside, but looking for short opportunities on that one. And US dollar CAD. US dollar CAD, we've looked at this one yesterday, and we looked at it on Friday as well. We were just coming down to this support. It's rejected it 3-4 times now. So we are rejecting this level quite substantially at the moment. There's no real signs of strength on the US dollar. So we've had that one initial liquidity run and a second one there. It's still, to me, it's slowing down at the moment. We are sort of bottoming out. We've just put in a higher low. So the market structure at the moment is looking like it is. This is where we are starting to shift to the upside. But we really need some confirmation. So we've had that new high put in there in the Asian session. So if we can get a pullback and break above that high, really yesterday's high is the key level that we're looking for. If we can break back above yesterday's high and hold that today, that market structure is going to be confirmed on higher time frames, i.e. we're going to get a reverse alert on the hourly. So you're looking at a beautiful looking W reversal alert there, and then potentially a retest and push from there. We should be getting some strength coming through, and this is a perfect zone to start obviously looking for entries. So looking pretty good on that one. Nicely extended on the 4 hourly. this is the other area that I've drawn in as support resistance. So this zone here is where we'll be looking for buy opportunities, and obviously it's holding at the moment, but who knows? So looking for long opportunities there. Obviously with the US dollar CAD, we are range bound at the moment, but we're, again, with so many pairs at the moment, we're in expanding ranges, and they're very, very difficult to trade expanding ranges because the market structure is very difficult to understand when you're in an expanding range. So yeah, it looks good from a technical perspective. It's a bottom range bounce that we're looking to play back up to the highs on that one. So that's all the 4 hours. Mainly, say, it's all dominated by the yens at the moment. The hourlies, very, very similar. Obviously, everything that's extended on the 4 hourly on the yen is extended on the hourly because it's continuously pushing at the minute. Euro CAD, as I say, we're looking really for short opportunities on those, and Euro yen. So it's all the same stuff on the hourly as the 4 hourly. So all the same. Gold, short opportunity. I wouldn't. I don't, like, as I say, I don't trade it. But I'd be looking more long only from a fundamental perspective at the moment. Gold's not really gone anywhere in the last 3 or 4 days. It depends on what, gold short, hourly, daily, 1 minute. Depends what time frame you're trading. Yeah. Right now, it's a lovely long opportunity back up to there if you're trading it on 1 minute charts. For me personally, 4 hour and daily perspective would be long. All depends on your perspective, doesn't it? When you're looking to get in, when you're looking to get out. If you want to short it here, where are you going to get out? Down there? If so, is that big enough risk reward for you? Can't really answer that question. Is it a short? Nobody in the entire universe knows. Let me put it that way. If we knew, we'd all be millionaires. We don't know. Nobody knows. You've got 50-50 chance of being right when you hit the buy or sell button. That's all we know. And we know that market is going to move forwards and up and down. Those are the 3 facts we have. No more. Couldn't tell you. Pushing out to the highs on the DAX. All indices pushing up again. FTSE also bouncing off of the 2050 zone. So good looking long opportunity across the board at the minute. So I'm going to play these long this morning. Not quite sure how involved I want to get in the market this morning. I might just go for 1%. And see if I can grab that this morning. So 1.5% basically. I'm 0.5% down. So if I can get to 1.5%, I might just try and take 1% out of the market this morning. Because I'm short bias and we're going long. And I don't know where we're going long to this morning. Based on the daily, if my bias is right, and we're going to go green to red today. Swiss yen, just hit ADR as well. If we're going to go green to red today, one of these previous 4 days highs should hold. So at the moment we're sitting within a control candle. The reason I'm biased on this short at the minute is we're sitting within this control candle here. Yeah, so we haven't broken out of this candle for the last 3 days, basically. I'm looking for this gap fill still. I still feel we are going to come and test this 14,000 level. I feel that we're going to smash through this 14,000 level, but I think at least we're going to test this before we break it. If the bull market is now kicking in and we've had enough of our bear market, I would expect them to come and fill the gap before they bounce. So my bias is short. I just don't know where we're going to test highs before we drop, assuming we are going to drop. So at the moment, we're very, very close to what I would class as potentially being high of day up here. We've got backup levels up there. So somewhere, if we are going to push higher today, somewhere up here, I would expect a retest bounce. I don't know where. And I don't like trading long near where I'm expecting the high of the day to be. So I really would, if I can squeeze 1% out of the market this morning, I'd rather sit there and wait and watch, because I think we're going to go potentially green to red today. Just based on the fact, on the daily, we've still got a gap fill short to play. We've also got, we've got this one as well down here. Don't forget. Obviously, this is to do with war stuff, but gaps get filled. Yeah. Gaps always get filled. So, say always, 95.9% of the time. I don't know what the figures are, but they get filled. So 70% of gaps get filled within 2 days of being formed. So the rest of them, I think the official stats on it, on the DAX, the S&P and the Dow, as an average, I think it's 48% of them get filled same day, 70% of them get filled within 2 days, the rest of them take longer. But they get filled. So that's that's the sole reason for my short bias at the moment. The thing that I don't know is how much of this is war. And obviously gaps may not get filled in war. Don't know, never been through one. So that's the bias and why I'm biased short and why I'm being a bit conservative this morning, why I took that initial long out the gates, because I don't think we've got a lot of room to the upside. So we'll see. We'll monitor. Andy, with the yen, it's all about yield difference, but we've known US interest rates are going higher for a long time now. So I think this move is over and done with. I'm still short UJ. Yeah, so do I. I mean, I really think the yen is coming down at some point very, very, very soon. It's just when. That's the thing I always say. You cannot time. The when is not timeable. Dragging my stops up. Oh, don't like that. Big order came in there, closing that out 1.1. Right, so this is yesterday's high. You can see, obviously, that little pop you saw there was a run on liquidity. So there are a load of orders there. Everybody that's short bias at the moment just had their stops taken out. So it's whether or not now sellers are going to step in and drag this down, or whether we're going to push up for more highs. But obviously you saw you visually saw there the stops being taken out, that being big pop to the downside. So 0.6 up. So see what sort of price action we get here. I'm going to wait basically for some confirmation. I'm going to need to see a low being broken before I'm interested in shorts today. At the moment, obviously, every time, as long as we're making new highs, we're long. When we start breaking one of these lows, that's when I'm going to start to get interested in short positions. So in theory, if you wanted to right now, depending on how strong your bias is short, it's basically sell stop under the low. If price moves up, doesn't take it out, cancel that pending, sell stop under the new low, and keep dragging a sell stop under until one of your sell stops is triggered. That is either going to be it, or it's going to put in the usual, some kind of M pattern reversal, and then obviously we'll be able to get in shorts. But this yesterday's high, we've got 2.5 minutes left on this candle. So if we can reject yesterday's high, for me that would be a very good indication. This could be high of day we just put in there. What's going on with our friends in Japan? So still no movement at the moment. Still got a weak US dollar this morning as well. Hideous accumulation on the pound. US dollar is really just not going anywhere at the moment. We've got no news catalyst this week either to take it anywhere. So not much fun. Poor old US dollar. Wow, oil filled its gap. And then some. Big drop on oil as well this morning. Again, oil, another one of those. We haven't got that gap filled. Once we do fill that gap, again, I think it's a long. We should be looking for long oil, long gold, while this conflict is going on, and inflation is rising. Those should accumulate higher prices. Again, it's just very difficult to time. Obviously, we did the A-shaped recovery, straight back down into the initial balance area. Rejected it with a nice tweezer bottoms. W off. All textbook stuff. I just timed it wrong when I was trying to get into it. But hey, timing. Okay, so very nice hammer, shooting star. Gone in on the DAX. FTSE's still pushing new highs. All the US indices still looking fairly strong. So the DAX is the only one really that's had a rejection. Obviously, that's had a rejection because we've just tested yesterday's high. So we'll see what happens with the rest of these indices. We could be pushing a little bit higher today. We'll see. Very extended away from moving averages as well, which is why I got out of that up there. Exhausted. Profster, you shorted the DAX. So have I, secretly, on my other platform. Yeah, I've just taken a short on my other platform. I'm trading basically speculatively here for a long term. Short. That's a big contract, so that's 10 lots short. I just saw your trade. 100 pips in profit already. You're trading. Are you trading with my Forex funds or? I can't remember. Not too sure about this short actually. Still pushing up on the Dow. That's a bear trap by the looks of things. So we're going to see how we get on a retest of yesterday's high. I'll close that one out manually on my other platform. So looking bullish everywhere else. Bit too quick into that one. Pound yen, ADR, still good movement against the yen. I believe NSD getting ready to dump. I'm assuming you mean NAS. Seeing as ANS and S&D are next to each other. That's a typo. Yeah, we're certainly slowing down across all indices at the moment. Whether or not that is the high, we will find out. But we are slowing down after the initial move. NAS is is looking like it's starting to put a bearish engulfing in, but DAX is looking pretty good. Yesterday's high on the Nasdaq's up there. Haven't hit yesterday's high yet. Just rejecting these lows again. New Zealand Jed 125 ADR now. CAD yen isn't moving as fast, so again, it's a bit like a stuck record at the moment. These Aussies and New Zealands are really getting pumped. There's so much money coming in for the Aussie and the New Zealand at the moment. Really, really big, strong moves again this morning on those two. So this isn't the yen. The yen is still a little bit weak, but you can see by the CAD yen there. Loads of New Zealand and Aussie dollar money. Much more Aussie New Zealand. So if you ever want to compare and see which one's in control, obviously Aussie New Zealand tells you that the New Zealand dollar is way, way, way stronger. And obviously we had that confirmed on the COT report this week. So New Zealand dollar flipped dramatically long, didn't it? Which was unexpected. Lots of money coming in for the New Zealand dollar at the minute. Aussie dollar yen ADR. So pushing up on the Dow still. Rejection on the DAX. Need to get some. We are putting new lows in, but the lows are all getting rejected. So there's still a lot of buying pressure at the moment. FTSE's still pushing up high. We haven't had a down candle on the FTSE yet. Dow obviously still no down candles. It is starting to show signs of selling though, but again, too much buying pressure. DAX just made an M pattern on M1. Yeah. Also holding its lows. But yeah, potentially. As soon as you get that reverse alert, you're selling straight into potential support there. But so again, we've got this need to see a breakout of that candle really. That'll give us an indication of whether or not we are potentially going bearish. Starting to break. Wow, we've really lost momentum here, haven't we? Still got 1 minute, 1.5 minutes left, but we are potentially getting bearish on the DAX, Nasdaq rather. Sellers are starting to kick in a little bit, but we'll see what happens at the end of this candle. I imagine that that you have a 5 million account, but you just won't say. No, I don't. If I had a 5 million account, I would put 4 million of it into investments, spend 1 million on cars, boats, house, all that stuff. Actually, no, I'd put 3 million into investment, and I'd have 1 million in the bank to just earn interest and play with. I certainly wouldn't be sitting here doing YouTube streaming. If I ever got to 1 million liquid in the bank, I think that'd be it. I'd be done. I'd be retiring. 1 million is enough to retire on. Just about. These days. Which is scary, isn't it? If you think about it right now, wherever you are in your life, if you haven't got £1 million in the bank when you retire, you're not going to have a happy retirement. How hard is that? New Zealand dollar CAD, ADR. So big moves on the New Zealand dollar. Still pushing. Okay, so we've got a broke below the lows on the DAX. So we are starting to look a little bit more bearish. NAS, all indices basically, first bullish candle in. Not convincing move down though. ORB was good today to the upside, gained to 2%. Rahat. Yeah, cool. Yeah, nice opening range breakout today. There's your entry. There's your stop. Yen powering up. Is it? You can only really tell with the CAD yen at the moment because all the other pairs are ridiculously strong. Is that CAD weakness though? Swiss franc. Wow. I'm just trying to figure out what that is. That's CAD weakness. We got some CAD weakness. So it shows you how weak how weak the yen is. We got massive CAD weakness, and it's only just trickling down against the yen. Proster, I want to retire in my 30s. Good luck with that. Not many people retire in their 30s. You can certainly put into place a plan to be time rich, cash rich in your 30s. That's really the best you can do. If you want to be time rich, cash rich, trading is a very, very good way to do that. As I've just done this morning, if you can make 1 or 2% at the open, literally within, 5, 10, 15, 20, 25, 30, half an hour, turn it off, walk away. Come back in the afternoon, look to make another 1 to 2%, turn it off, walk away. So it's very easy to be a millionaire on 2 hours a day trading. Mentally, very, very few people can do it. Technically, it's very easy. On paper, it's simple. But actually being able to do it is another matter. Good movement coming down on CAD yen now. So that aggressive position I've got on will be working out nicely. It's even battering down the New Zealand, which is good. Best way to retire in your 30s, I think, is to you got to set up a decent software company or some kind of business that a big company wants to buy. That's the easiest way. But the hard thing is coming up with the idea, isn't it? If it was that easy, again, we'd all have done it. But welcome to one of the hardest jobs in the world. DAX showing a few more signs of rejection. I'm toying with the idea of closing this position out that I've got running. If it's going to come off of higher day, I would have expected a little bit more movement than we're getting. The other indices are doing okay, but the DAX seems starting to move now. DAX doesn't seem particularly like it wants to move an awful lot at the moment. Does anybody else know anybody that managed to retire in their 30s or their 40s? I don't. Mind you, I don't mix in those circles. So if I did know somebody that retired... Actually, I do know somebody when I was in his 20s, actually. He basically stopped working, but that's because he inherited loads of money from his parents, who unfortunately died. But he became the most popular guy down the pub. It's not often you go down the pub and meet millionaires, but he was a normal bloke. Just happened to land on, I think it was about 5 million or something he inherited. And he retired. Well, he actually didn't start working. He was in his 20s. Basically, he just didn't start working. Very nice. No idea what he does now. What to do if sometimes the ORB is not in favour and close above and below the lines? Well, that's a whipsaw, basically. So you're talking about if it closes above and then it closes below and then it does that. Yeah, you just get stopped out multiple times. I would only ever try once. Yeah, if the opening range breakout fails, i.e. if you take the opening range breakout and it stops you out, take the opening range breakout short. If it stops you out, you've stopped out of 2 positions. You've lost 1%. Or whatever. I mean, it depends what you're risking. But, I mean, if you're risking 0.5%, you would have lost 1%. You've only lost 2 trades, haven't you? That's normal. As I said yesterday, losing 10 trades in a row, very, very common. You're going to have times where the market's just going to chop you to bits and it's just all going to go wrong. Strategy's a strategy. It works or it doesn't. But if you keep trying, yeah, I mean, eventually one of them will work. Yeah? But 1, 2, 3, 4, 5, 6, 7, 8. If it takes you 9 attempts to get one to work, you better get a 9-to-1 risk-reward ratio out of that. Because if you don't, you're going to lose money. I don't like this DAX short. I'm 4 pips in profit, which for me is $10 a pip. So I'm not really enamored by it. So I'm closing it out. The other trade I've got running. This isn't moving. When I see a trade working like that, if I'm expecting a bounce off the highs there, I want to see it bounce. I want to see it move. It's not moving. We've got a lot of buyers stepping in, so I don't like the look of this. Looks long to me. We're accumulating potentially for another leg up. I've got 0.7% banked, so I'm going to leave it there this morning on 0.7. And I think I might just watch this morning because I'm not quite sure. I want to be short on this, but I want to see decent price action. So I'm going to look to see if we get some market structure short. So I want to see a push up and a new lower high put in. And then something to show me some bearish price action up there. We're well above the moving averages at the moment. So, you know, all markets are long at the minute. It's very hard to try and pick the top. I'd rather wait for it to start to show me signs of going short and then sell on a pullback with a view to going green to red today. But this looks doesn't look bearish, does it? It's a bit bearish, but not very bearish. So it doesn't. I don't like it. Don't like it. There is one famous success trader here in Kuwait. He also owns a broker. He said support and resistance are there to be broken. Yeah, they are. Breakouts. Yeah, I mean, there's a million ways to make money in the market. Like I said, every time you hit the button, you've got an opportunity to make money. You've got 50-50 shot. So you're a breakout trader, you're a pullback trader, you're a trend trader, you're a mean reversion trader, you're trading M1, you're a scalper, you're trading hourly, daily, you're a swing trader. Yeah, support and resistance holds 90% of the time, breaks 10% of the time, depending on what time frame you're looking at and what chart you're looking at. Other times it might be holding 70% of the time, failing 30% of the time. You know, doesn't matter, does it? You give me any strategy that somebody says is the best strategy in the world and I'll prove it wrong 1,000 times. They will prove it right 1,000 times. It's 50-50. Reversal alerts. What's the strike rate on the reversal alert indicator? No idea. What time frame you're trading, what instrument you're trading, what hours you're trading. You know, it's as good as the person in front of it. You take a reversal here. CAD yen, I've taken a short this morning. Is it going to work? I've no idea. I couldn't tell you. I've no idea whether this is going up or down today. I couldn't tell you. But I do know that the odds are in my favour because I know that when you get that sort of pattern forming, a lot of the times they hold. A lot of the times they don't. You know, is this resist support here going to hold? Your guy will say it's there to be broken. I might say it's there to be held. One of us will be right. Someone's going to buy. I'm going to sell. Therefore, we are both transacting together. If it goes up to there, he takes profit and then goes down to there and I take profit. We both won. Yeah, it doesn't matter, does it? You know, everybody's got a different strategy. Glad I got out of that DAX. Didn't look like it was going down. It didn't move fast enough for me. But saying that, obviously we've now got a high and a low. So if we put in a lower high somewhere and then put in a lower low, then I will start to get interested in shorts. So right now, a good short is a sell stop under this candle. So if we are putting in market structure short, this is the pullback. Yeah. So if you wanted to, and you're speculative short on this, get in now. Or for confirmation, get in when that breaks. My Bill retired in his 30s. What's your Bill? Bought a houseboat and has been sailing the world ever since. He worked for AOL and bought all the stock he could, super cheap. Good man. Brother-in-law, Bill. Yeah, that's what I mean. Yeah, you know, he worked for a company and he had inside information into what that company was doing. You know, AOL were first to market with the internet, with home internet, America Online. You know, so if you've got half a brain and you either own a business or are in a business like that, then yeah, that's the way to do it. You just got to be smart. Unfortunately, I missed that boat. But again, buying a houseboat and sailing the world, you know, there's lots of different types of retirements, isn't there? a lot of people's view of retirement is becoming a multi-millionaire and retiring with a load of money in the bank. I've got a friend of mine who has retired, and funnily enough, she has a houseboat on a river not far from where I live. And she's not got any money, but she has a houseboat and she has no outgoings. She grows food on her houseboat. She powers her houseboat with solar. She has to pay council tax for waste refuse collection. But other than that, she doesn't have any bills. She's retired. Retirement is what you make it, isn't it? If you don't want to work anymore and you want to live on an island and live off the land, you can retire with 50 quid in your pocket. But most people's view of retirement is a ton of cash and yachts and cars. That's my view of it as well. But hey, you're either materialistic or you're not, aren't you? On the FTSE, it looks like we may have seen a stop hunt high above yesterday's range. Yeah, we've seen a high. The indices aren't manipulated in the same way. Stop hunts really don't exist in the same way as they do in Forex on indices. You're more likely to see a push higher off of something like that. You don't really get stop hunts. This is algorithmic buying and selling. Algorithms will be sitting. The way basically the stock indices work is the majority of the buying and selling is done by algorithms, by hedge funds, investment banks, and things like that. So the transactions taken. Basically, anybody that is putting more than 100 lots into the market, 100 contracts into the futures market, is classed as an institutional trader. Institutional traders are buying to hold, not buying to speculatively make money. So they are buying to hold for their fund. So they have been told to buy X number of shares in this sector, and they are going to drip feed those positions in algorithmically until they have their contracts complete. And they will defend the areas, which is why I keep saying about these zones, these accumulation breakouts. What these are accumulations of shares and large order dumps. And when these get sold back into, the funds that have been told to purchase stocks will repurchase and defend that position, because their interest is to make the price go higher and to add to their positions to buy more stocks. And they will be holding for days and months. So the fact that something gets up to a high doesn't mean it's been liquidity run or stop hunted. It means that basically the stocks, or the stocks in this particular indices in this case, are overpriced. Therefore, it is not viable for the funds to purchase at those prices. So they will wait for prices to come down and then rebuy and add to their positions. The reason it moves up to previous levels is because that is where those stocks were deemed to be expensive in the past. And therefore, when we get to those levels again, unless something dramatic has changed within the stocks held within the indice, that will also be where those stocks are expensively priced. Therefore, you will see people that have taken speculative long positions exiting their positions. Yeah. So unlike Forex, where Forex is manipulated up and down by the banks, and the vast majority of the money that comes into this is speculative. I'm just going to cancel that pending off. That is manipulated. So they are moving price to levels to find liquidity, to basically grab liquidity to power up moves. So the Forex market works completely different to stocks and indices. It looks the same. It looks like the same thing's happening, but under the hood, if you like, that isn't really what happens in the stock market. It's a little bit different. But it's the same sort of thing happening, yeah? So when prices get to levels in the stock market, there will be orders there placed to go in the opposite direction. So you will have speculative traders obviously in there. And when it gets to those prices, it's just mass execution that the algorithms detect to either do one thing or the other. So in that way, I suppose it is rigged, isn't it? DAX making new highs. So watching for these higher levels now. And again, this, like I've just been saying, the reason I'm watching these levels is because this is where the market has deemed the DAX to be expensive in the past and has stopped buying. Yeah. So we're going to buy stock. So the algorithm, let's say I'm in, I don't know, ABC hedge fund, and we need to buy aerospace stock. So we're buying up aerospace stock, and we've been told to buy it at a specific price level and sell it no lower than a specific price level. So we start buying it up, we start buying it up, we start buying it up. We see the levels where historically it doesn't get bought up anymore, and we try and buy there. If we buy there and the price slips too high, the algorithm that we're using will say, can't buy anymore here, there's not enough people looking to sell their stocks. So we will need to wait for it to come back down, and then we will rebuy it when we get a better price on it. So these are just historical price levels where, let's say this is Boeing. Yeah, we don't want Boeing price to go above that level because it overvalues the company. Therefore, it won't go above that level. So when we get to these levels, they automatically become resistance until they're not. Until someone goes, actually, I'm happy to hold Boeing stock higher than this, and then it will move. And all you're seeing here is 40 of the stocks in Germany, and you're seeing the top 30 stocks in the US, and Boeing is in there. But it's complicated. You don't need to know all this, really. Price action's key when you're trading stocks and indices. Price action tells you a lot. Anyway, that was a long waffle. Which MA do you use for scalping the market? So I just use the 20 and 50, as most people do. The 20 is the main one, just for trend direction and strength of trend. So there's the two reasons I use it, and I have used it, and it's the same as I use on on FX. I use the 24 and the 72 because obviously these are the institutional moving averages, the monthly and the quarterly. And the same principle applies. The further away you are from the moving average, the higher the likelihood of a mean reversion. But with stocks, when, like I've just explained, when the funds start their buying cycles, they will tend to trend. So you go into a trend day. So I can tell at the moment we're in a trend day. So we look for long opportunities until we see potential areas where the trend might end, and that is where we take our profits, which is why I took the profit there. When we break down below that 20 moving average, it doesn't mean necessarily we're going down, it means we're pulling back in the trend. So the 20 period is literally representing an hour and a half trading, and the 50 is the backup. But these are used by most traders for no other reason than they are a self-fulfilling prophecy. Yeah, if I'm buying here, so's Joe Bloggs, and if Joe Bloggs is buying here, so is Fred Jones. And if Joe Bloggs and Fred Jones are all buying here, we're creating what? Positive movement in the market. People see positive movement in the market, therefore they start buying. And as people start buying, it starts a buying frenzy. The algorithms detect it and they start buying. It's just that's why most traders you will find have a 20 on their chart, because it just makes us all do the same thing at the same time, and it helps price move. But at the end of the day, we have got no control over it. Obviously, the institutions are doing all the buying, but the institutions execute their orders in batches. what people call order blocks of 100 contracts or more at a time. It's very interesting, the mechanics. Go and read Al Brooks's books if you want to know about price action and how the markets actually work underneath the hood. But as I say, this will burn you out way faster than trading positions, because obviously you're intensely concentrating on this, and it fries your brain. Especially when you start to get older. Fries it faster. So double bottoms held on the CAD yen. And your settings for the gap indicator. It's all just the same. It's 500. It's the only setting, really, 500. I look back 500. I mean, with indices, I mean, 500 is more than enough on M5. Yeah, we're going back a week. These zones are old. But I'm looking for areas. All they're doing is showing me accumulation breakouts. Yeah. So these are just accumulation breakouts. And this is what I'm just saying. The principle is an accumulation breakout will be bought up by the people that caused the accumulation breakout. Therefore, a retest of that area typically will end in higher buying. More buying, rather. So if we pull back into this area, that's likely where we will see the next buying happening, if we're in a trend. What do I think about Bitcoin? Long bias. I don't have a view on Bitcoin. I don't trade it. Whatever the indices are doing. So have a look at the S&P. Whatever your bias is on the S&P, that should be your bias on Bitcoin, because they're linked. We had a big squeeze recently in euro pairs due to the war. Wasn't it better to switch to pullback strategy to go with the fall or the trend? Yes. Yep. I've been saying for probably 18 months, Rahat, short the euro. Done nothing but short the euro for the last year. If you were long on the euro, I can't help you. Euro's been a short. But yeah, you want to be... If you want to trend trade... obviously, with position trading, I mean reversion trade. Yeah, if you want to trend trade, do it. So it's very easy to trend trade. If it's red, go short. If it's green, go long. Yeah, short every pullback. Yeah. And in which case, obviously, if you're trend trading, you don't need this. You wouldn't use the RSI. You could use the RSI. I mean, a lot of people, when they're trend trading with the RSI, they take a cross of the 50. And if they're pullback trading within a trend, they'll take a cross of the 60. So if it pulls back to the 60, that's where you go into your shorts. So in this example here, where are we? 60. You'd have entered short there. You'd have entered short there, there, maybe there. So that would have been a short. 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 And you'd have been short, obviously, here. And you've been short here. And obviously you've been short there, but because you've been way above it. But different strategies. Not what I really trade personally. Fires your brain or fries your account. Oh, fries your brain or fries your account. Yeah. M5 scalping. It's hard. The only reason I'm doing so much more of this at the moment is just because of market conditions forcing me to. That's why I'm just doing more scalping. This is how I used to trade. I used to trade using the 2050 on M5, and I used to literally just trade price action at support and resistance. That is how I became a break-even trader on M5, using this indicator here, this shadow indicator. Yeah. So every time we pulled back to the 2050 zone, which is what the zones that I was using, which is what I'm using here, and I saw price action, I would take a long if it was at support and resistance. And that's basically all I did. And it works as long as the market is trending. But what I discovered was 80% of the time the market is not trending. So I needed a strategy for when the market wasn't trending, which is when I started looking back into mean reversion, which is when I started going back into market structure. And the rest is history. We are slowing down now. So we're coming up to the hour and a half mark in 10 minutes. 90 minutes is when we tend to see the market slow down. And quite often we find high of day at the 90-minute mark, or low of day, depending on which way we've gone out the gates. So we could be at a point where we're going to start to slow now. So I'm going to be watching for market structure shifts to the downside. ADR 150 on the US dollar yen. This yen's really, really not happy, is it? 150 New Zealand dollar yen as well. Pound yen 125. Euro yen almost. For the euro to be beating anything is astonishing. Swiss yen. CAD yen. Back up to ADR on the CAD yen. Just making new highs. Swiss yen's hit its monthly range as well. So we just tapped into those highs there. So again, lovely setup short. Give that candle, wait for that candle to close. Stop below the low. If that's going to be a double top, huge risk reward. GJ also extended, but doesn't look like quitting. No, none of these yens are. These yens are just off the scale at the moment. They really are. It's just unbelievable the amount of movement we've got across these yen pairs. The weakness in the yen. And we typically see, as I say, the whole market is completely shot from a technical and a historical perspective at the moment. We tend to see US dollar strength coming along with yen strength historically. It's not happening at the moment. We tend to see the Swiss franc powering up and dropping. It's not happening at the moment. We tend to see, or we have seen for the last 18 months, a very, very weak euro with no fundamental reason why it should be strengthening. And yet it is. It's all, everything at the moment is just really, really, really back to front. Which obviously means you have to adapt. You've got to adapt to market conditions. And at the moment, it's all over the place. Lovely double top forming on the CAD yen. So yeah, we're just seeing some very, very odd numbers on a lot of these instruments at the moment. And obviously these yen pairs definitely way, 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 way weaker than we were anticipating them to be. Just starting to slow down a little bit across the board on those yen pushes. Pound yen has just hit a 168 extension on that move, which wasn't really. Get rid of that one. It's an old fib. Out of whack. Yeah, everything's out of whack at the minute. I can't see it getting into whack, to be honest, for a while. It's just, the whole thing with the Ukraine, that is still not rectified. And as soon as he starts using chemical weapons, I really don't know what is going to happen. The world can't keep rolling over basically every time he does something like that and say, oh well, maybe next time. There's got to be an end to it at some point. So just very worried that's going to happen shortly, and we're going to get some very protracted conflict with NATO getting involved in it. So Dow is just starting to roll over. So Dow's basically rejecting at the minute. So again here, prime example, we pushed up, pulled back, accumulated for 2 bars, pushed up, accumulated, we're dropping back. Either the buyers are going to step in now, or the buyers have run out of steam, which is why we're seeing these wicks. Yeah. So these 3 candles are dojis, which is indecision in the market. So the buyers and the sellers have entered equilibrium, i.e. there is as much selling pressure as there is buying pressure, which means that either the buyers have executed all of their orders and there are no more buyers left, or the sellers have deemed it too expensive for this index. Therefore, we need to be selling it because it's overbought. If this section gets broken, the buyers are not adding to their positions, the sellers start to take control. Let me see the market moving back in the opposite direction. Going short one on the DAX. 5 seconds left on this candle, no seconds left on this candle. So going short one on the DAX. See if we can catch the top of this move. Main reason I'm shorting the DAX is because of the movement on the Dow. That's a big protracted move. Basically, we've just undone the last 20 minutes price action in one candle there. So we've broken back below that low. Obviously, if the indices all start to sell off, we will tend to find them all start to sell off. Obviously, this section here is where we want to be looking for potential bounces if we are going to, and in which point we will also be sitting within the moving averages. Just going to reduce risk on this as well. Actually, what I'll do is I'll leave it above that high. This is the high, previous high of the day before last. What's the day? Is it Wednesday? Tuesday? Yeah. So it's Friday's high, last week's high. So CAD yen's come off the highs. Swiss yen also. So obviously it's only one 5 minute candle this, and obviously it's an inside bar. These are all inside bars at the moment. So in theory, all this is a pullback. So unless you've got a level that gives you a reason to enter a trade, it's not necessarily where we're going to turn. What do I think of ICT and BTMM concepts? Yeah, great concepts. My market reversal alert indicator is very similar to the concept. I mean, it's all the same stuff. There's a lot of people out there recycling the same stuff in a slightly different way. And me to a certain extent the same, but it is because it's all the same stuff. BTMM came up with the M pattern. Well, it didn't come up with the M pattern. The M pattern is usually it's either a double top, an uneven double top, isn't it? That's all that is. So the double top, BTMM did not come up, Steve Mallow did not come up with the double top. It was already in existence. ICT did not come up with the stop hunt. It's just an uneven double top. The concept of order blocks was taught to ICT by his mentor. He didn't come up with that. The propulsion candle, what I believe are inefficiencies in ICT's course. These were invented by M.A. Perry, and they're called a wide range bar. Again, it's all the same stuff. What label you stick on anything is all the same stuff. It's price action. It's market structure. It's all the same stuff. It's just there are many different ways to explain the same thing. And that's what you need to do when you're learning to trade. And this is what I say in the course, the Boocamp. I've done the same as every trader needs to do. You need to go and do lots of courses. You need to try lots of indicators. You need to look at lots of different strategies. You need to try different time frames. Parts of everything you do will stick. And some of it you'll go, that makes no sense. I don't get it. If you don't get it, don't use it, because you can't. If you go through ICT's entire course, which I think you have to do over 12 months or something, and you don't get it after month 3, stop, because you don't get it. If you don't get it, you don't get it. It doesn't make sense to you. If you then go and do another course and go, that makes sense, follow that. And then if it makes you profitable, brilliant, develop it. What I've done is taken lots and lots and lots of pieces of all the stuff I've learned over the last 13 years and bodged it together into my own thing. But, BTMM uses a type of ADR, but he uses it to scalp on M5 and lower time frames. I use it for lots of different reasons, and I furthered study of it to find out what other edges were available, i.e. what happens when we get to those extensions. So, it's all the same stuff. You just got to try things. But they're all good. Anything good. All education is good. What I don't agree with is charging £1,500 or $1,000 or something to educate people. Personally, which is why my course is on YouTube for free. Because you can learn a lot online for free. It's just that the thing that's lacking is structure. There is no structure in learning. What people want, I think, and what I've always wanted, is lesson 1 is this, lesson 2 is this, lesson 3 is this, lesson 99 is this. When you complete lesson 99, you are a trader. That does not exist. There is no course out there that you can go from class 1 to class X and be a profitable trader. It doesn't work. You have to do 10 different courses and extract lesson 2 out of that one, lesson 51 out of that course, and lesson 74 out of that course. Take those 3 bits, combine them together. They all make sense to me, and now I understand what I need to be doing for my personality, for my psychology, for the time frame that I can trade, the amount of time I can put into trading, and my risk tolerance. That's what, in reality, you need to do. They are all leaked. What do you mean leaked? Oh, what? Yeah, I mean, there's versions of all sorts. Just closing my DAX trade. I've got a DAX trade running on my other. Closing this out. Don't like it. We've just come off yesterday's high and this propulsion gap. Again, I'm calling this a propulsion gap. If you want to call it an inefficiency, call it an inefficiency. If you want to call it a wide range bar, call it a wide range bar. At the end of the day, it's solid price action in one direction, causing the market to move fast and hard. Call it what you like. I didn't invent this. No one invented it. It's a number of ticks within a time period. And the more you try to justify things like that, it's the more difficult it becomes. Your brain gets overloaded. You get analysis by paralysis. Paralysis by analysis, even the other way around. Yeah, all courses are leaked. You can't. There's nothing sacred in this industry at all. If you make a video, someone will copy the video. If you write a book, someone will scan the book. If you create a password protected video, someone will copy it and someone will hack a website, grab it, and you won't be able to tell who did it in the first place anyway. There's nothing is sacred. Just absorb as much information and content as you can, and understand the three principles of trading. As far as I'm concerned, 1, you got a 50-50 shot every time you hit the button. 2, the only thing we know for sure is that price is going to move through time and go up and down. And 3, you need a risk reward that is profitable and gives you an edge. I.e., if you're using a 1-to-1 risk reward, you need to have a strike rate of 50% or higher. If you've got a 1-to-2, you need a 33% strike rate or higher to make money. As long as you understand that every time you hit the button, you don't know which way it's going, and you shouldn't care which way it's going. If it goes your way, excellent. If it doesn't go your way, deal with it. And that's going to take time to happen. Just make sure that when you close the position, you make more than you make on your losers. That's literally trading. And if you go and read Al Brooks' price action books, he says very much the same thing. Trading in the Zone by Mark Douglas, another amazing book. Again, there's PDF versions of that all over the internet. Mark Douglas is dead, unfortunately, but they all say all the successful traders out there will tell you the same thing. You don't know what's going to happen. I hit the sell button there thinking that was going to go short. It didn't go short, so I got out. I had a 50-50 shot, didn't play out, so I cut my loss. Now, if this thing tanks, I can't tell you what's going to happen because I'm not in control of the 250,000 contracts that are going to be traded in the next hour. I can't tell you who's going to press what buttons, which algorithms are going to work, which hedge funds need to execute what trades in what direction. I haven't got a clue. All I know is when I hit the button, when that happens, I've got a good chance it's going to go down because there's a load of sellers entering the market. I don't know how many people are going to sell. We could have that many, we could have that many, we could have that many. No idea. But I'll take what the market gives me because I can't take anything else. If the market doesn't give me any more, I can't take it, can I? You can't force the market. You just have to get in and extract money from the market as it moves up and down through time. And that is unfortunately the only thing we have got no control over. Yen being prime example at the moment, my setup has told me to go short on the CAD yen. So I've gone short on the CAD yen. My setup's not working. So I've got to deal with it. And position trading, obviously, the way I deal with it is with aggressive drawdown control and using profits to pay off losers. But you have to deal with the position that you're in. And if you're position trading and you're getting into a position where there's no profit take happening, you just have to wait. We know at some point this is going to come down. Why? Because it always does. Go back in history and show me a time where it didn't do that. It has to do that because this is a market. And in a market, there are buyers and sellers. People that buy have to sell. If they don't sell, they can't make money. Think of it if you're a market trader, yeah? And you went out and you bought 50 PlayStation 5s, right? For $300 each. Yeah, you go to a market and you say, I want to sell my PlayStations at $400 each. As long as there are people that want to buy those PlayStations, you can sell them. At some point, you're going to go, actually, I'm not going to get it, so I'm going to sell them for $350 because they're not selling fast enough. And you'll keep reducing your price until people buy them. Yeah. So I've just bought a load of PlayStations. What have I got to do with my PlayStations to make money? I've got to sell my PlayStations. Everybody that's bought here to get out of those positions has got to hit the sell button at some point. We just don't know when. We do know it's going to happen at some point in the future. We don't know when. You can't time it. And this is where everybody gets killed, trying to time entries. There you go. See, that's gone down now. If I'd have held that, I'd be in profit. But, and some people will be holding it. If anybody else in this room now has taken a sell when I took a sell there and they're still holding it, well done. You made money, I didn't. Now, next time I make money, you don't. It's just the way it works. You just need to manage your own account and hit the buy and the sell button when you deem it necessary to do so, and get out when you deem it necessary. There is nothing more complex. And that's what all the courses will try to teach you, which is why I give a load of different strategies with the market reversal alert indicator, because there isn't one strategy. There isn't one strike rate. There isn't one way to use anything. Some people use this as a trend indicator. Fine. If you can use it as a trend indicator, everything crosses the 50, they go long. When it drops below the 50, they go short. Brilliant. When I use it, when it gets above there, I go short. It doesn't matter how you use it, does it? It matters. What matters is when you get into the trade, what happens after you take that trade. I got out there wrongly. I should have stayed in it, but I didn't know because that looked bullish. Don't want to labour the point, but you get the point. There is no course out there that will make you a successful trader. If you read every book under the sun, you will not be a successful trader. If you are the best person at identifying chart patterns in the world, you're not going to be a successful trader. That isn't what makes you successful. You can be the best lawyer in the world and you could have memorized every single law book out there. When you stand up in court, if you stutter, you're not going to be a good lawyer. Yeah, tools aren't what makes somebody good. They help a lot, but anyway, sorry, waffled on there again. The day I started trading, I went to Discord. He's a logic guy. I like the way of trading using fundamental and technical analysis. He charged about $30 teaching one-to-one. Yeah, I mean, again, I would say just a beginner's course, which is great, but you get what you pay for. Yeah, you pay $30, you're going to get $30 worth of education. What the problem is in this industry is people presume that if you pay $1,000 or $1,500, you're going to get a better education. You're not. You're going to get the same education as you get on Baby Pips. Everything you need to know is on babypips.com. If you want to learn how the market works, learn price action, learn indicators, learn market structure, everything you want to learn, it's all on Baby Pips and it's all completely free. If you pay for a course with anybody out there, not mentioning any names, if you buy a course, you learn the same stuff. Just taught in a different way, with a different perspective. But that's the reality, I used to sell my course. I sold it for $50, for God's sake. It's 15 hours worth of my brain for 13 years worth of trading, and I sold it for $50. But I'm not looking to make money out of courses. The people that are selling 1,500 quid courses, they don't make money trading, they make money selling courses. It's a different thing. It's just different. This industry is very, very, very difficult. He did an economic course and technical course and explained the simple stuff. Yeah, that's good. That's good. Yeah, everybody's got to start somewhere. Just absorb. That's all. My best advice. If I went back and told myself something I needed to know, it would be A, stop hunting for the Holy Grail indicator. There you go. You've saved 5 years of your trading career. B, don't spend thousands of pounds on courses because they're all rubbish. Because they in those courses do not know you, do not know your brain, do not know what time frame you're looking to trade. Therefore, they cannot teach you. And C, just read, and watch price action charts. Watch this going up and down all the time. Best thing you can do is come in here and basically do that. If you sat here for 3 hours every weekend and watched that going up and down, your memory, your brain, your eyeballs will have price action and market structure burnt into them. And you'll see what happens in the market. You'll see this going on and over again. Every time you see one of these whacking great bearish engulfings, it goes up. Every time you see one of these whacking great engulfings, it just, if you see this, if you watch this for 10,000 hours, and this is the best way to watch 10,000 hours worth of price action, and fast forward. You can sit here for 10,000 hours in real time, or you can watch it in here. You're seeing the same amount of data unfolding. Your eyes are taking the same amount of information in. Watch what happens when it moves to areas. And before long, you'll be going, wow. See, I just saw a 50% retracement there without even looking at it. I didn't have the fib on the chart. I saw a 50% retracement because I've seen this happen so many times. My eyes just know it's happening, and you can't teach somebody that. You got to do it. You got to be in front of the chart. Anyway, lesson over for today. I'm waffling. The only reason I'm waffling is because the market's not going anywhere. So the 90-minute opening range high is in. Okay, so potentially we are at the high today, but we're not going anywhere. We're in lunch. We're not in lunch. We're only at 9:45, but the market's gone to sleep. So I'm going to call it there. I'm not going to take any more trades today. I can't seem to get into the market and get any follow through, and I don't want to be scalping one candle at a time. So how much importance is the 90-minute opening range breakout 2 lines, Rahat? So this again is Al Brooks' theory. And it's really for indices only, and more for US indices in the US session. But if you look, and again, you can look at this in the strategy set. If you've got the price action toolkit, you can go into the strategy tester and watch price unfold and watch it draw these lines in for you over and over and over again every day, and you can watch months and months and months of this unfolding. But after an hour and a half, there is a 70% chance that we've found the high or the low of the day. 70%. Doesn't mean it's going to do that. Doesn't mean it's going to do that. What it means is there's a 70% chance we found the high of the day. So it could do that for the rest of the day and not go anywhere at all. Doesn't give you any opportunity to trade. But what it does often mean is you should really have a bias short. And it can fly off up there. Yeah, in which case your bias is stuffed. And like everything, like I've just explained over and over again, a percentage chance of something happening doesn't mean it's going to happen. It gives you another reason to do something. Morning, Trevor. He reminds me of the way you talk. It's like a second Lee. I imagine the guy, he's obviously English. Yeah, so he talks like me because I'm English. But I imagine he's been through the mill the same way as I have over the years. And you just get to a point where you give up hunting for something that is going to give you an arrow. And you just resign yourself to the fact that you have no control and you have no clue. Therefore, what you have to do is hit the button and hope. And that is a lot of what I do, is hitting the button and hoping. And sometimes, like yesterday, I made $4,000 yesterday, shorting and I put it in the Telegram group yesterday. I put the trade in there yesterday, and I explained why I took it as well. Took that trade short yesterday. Yeah, I got in on that bearish engulfing, and then that happened. That was just one trade. I had two positions on. I had a position on there and I had a position there. I took one of them off. So I made about 2,600 or something on one short entry. But the reason I took it was because of that. Yeah, there was a support level which we touched and bounced off of. We touched it again, and I saw a bearish engulfing, so I took an entry. Yeah, I had no idea that was going to happen. I was hoping it was going to come down, but I had no clue whatsoever. I knew that we were in potential short market structure territory, but the reason I made money yesterday was because I was lucky. I got a lucky couple of candles, and you'll discover after trading for a while that the lucky couple of candles is where you make 90% of your money. When you get these big moves, if you see an accumulation and then you see that move go lower and you say, right, I'm going to take a short. If you get that happen to you and you go, wow, that's 4% and I've not had any reason to get out because it hasn't given me a reason to get out, that could be the trade of the month. Which is why, people say to me again and again, how much can I make trading? I've no idea. No one has. Some months I make 5%, some months I make 15%. On average, I make 10 to 15% a month. A lot of the time, I will have 5, 3, 7% months. I have the occasional 25, 30% month. Before Christmas, I had a 45% month. I've no idea. The market will give me what the market gives me. If I'm just hitting the button and I'm getting it right 80% of the time, I'm going to ride that 80% and I'm going to take that money. It's a long game. Support. We're bouncing at the moment. Good reason to hit the long button right now, if you want to. I'm not going to because I'm not happy with this price action. But if you hit the long button now and this thing goes boom boom, brilliant. Congratulations on your 1%. Trevor, you're very late this morning. I've learned more relevant knowledge here with Lee than anyone else, anywhere else. That's good. Well, that's what, because I only talk relevance. I'm a logical bloke. I'm a programmer. Yeah, I don't. If it doesn't make sense to me, or I don't believe it to be true, I don't mince my words, as you know. I like what I like, and I know what I know, and no one's going to sway me otherwise. When people say to me, have you seen this indicator? It does this, it's amazing. Yeah, probably. But when I saw it 3.5 years ago, it was called something else. They've just repurposed it and painted it a different colour, made the lines bigger and put a bigger arrow on it. Still does the same thing. It's based on the MACD. Or whatever it is, every indicator under the sun that you see that is custom is created based on other things, mine included. Market reverse alert indicator. The logic behind this is market structure, which is based on zigzag, and it's based on other conditions like momentum. So all it does is it paints what I want to see on the chart, which is which way is the market moving or potentially going to move next. Doesn't make me a good trader. Anyway, stop labouring the point. It's important to have good data. The default data in MT4 is crap, and you will detect movement that is more reflective of how they smooth the historical data rather than the price really does. Yeah, it is very much so. Data is key, especially when you're back testing. But data is, again, data. What you see live is very reflective of what you see with historical data. Whether it's painted there or there isn't that important, which is why I draw in zones for support and resistance. So if I see a couple of resistance, like I did on what we were looking at, US dollar CAD. So that's why I draw that in. Yeah. These two lines together are where I'm expecting a reaction to happen. I've no idea where. So if your data is there or there or there or there, it's not that important. It's roughly an area where price will come and move. It's never exact. It is exact. Sometimes it is exact. But the reason that is drawn like that is because of that. Support and resistance. Yeah. So therefore, somewhere here, I'm expecting a reaction to price. Where it's going to go, no idea. Couldn't tell you. But this is where I would expect something to start happening. Which is why I take such small profits. I'm looking for a quarter to a half an ADR, maybe an ADR, because I don't know how far this is going to go. I can't tell you. No one can. I'm expecting, based on the price action we've got at the moment, some kind of bounce on the US dollar. Negative, but I've got a positive bias. And this is how confusing the market is at the moment. Everything's turned on its head at the minute, which makes it very difficult. And that's why I kind of labour the point. You've just got to hit the button and get in. And if you're right or you're wrong, you've got to deal with it. Lee's logic is 1 + 1 = 2. It is. It's not rocket science at all, is it? Trading. It really is very, very simple. Price moves up and down and forward through time. That's all you need to know. You could drive yourself mental for a decade trying to find a way to second guess what's going to happen in the future. And the one lesson, if you take one lesson away, that's it. You can't. I've tried for 10 years. I can't. No one can. The amount of courses, mentors, educators, indicators over the year that I've seen come and go and don't exist anymore. If you go to a domain provider and type in the word Forex, you can buy second-hand domains. Yeah, go into a domain name provider that sells second-hand domains. Type in the word Forex. Pick 50 of them at random, and then go to the way back when machine, which allows you to see historically websites from the past and put those domain names in. The amount of things that have come and gone because they looked amazing, they worked really well for 3 to 6 months, and then they vanished is unbelievable. And I've got links in my trading folder, and every now and again I go through and clean them up because I go and visit them and they're not there anymore. This industry is just very, very, very full of not misleading information, but too much. That's just the problem. I think that's the problem. There's too much information out there. Simple. Keep it simple. I'm talking more about the raw movement of price, the tick data. It's hypnotic, but the historic data smooths it out. It's like watching the market breathe. Yeah. So tick data is obviously very different. US dollar yen, 200 ADR today. The yen is really, really not happy today. While I've been talking, the Japanese finance minister has been talking. Uncertainty is bring up the screen so you can see it. Uncertainty is unfolding over the Ukraine situation, the economy and financial markets. We will use the COVID reserve fund as and when necessitated next fiscal year. The weak yen is both positive and negative. That's really helpful. Thanks for that. So that's why important to nimbly address. Okay, so that's why the yen is off today. He's obviously been talking bearish this morning, which has obviously bolstered the yen. So again, this market is moving dramatically higher. Shouldn't really have that on there. So we got very, very big, strong movement up today based on what he's been saying. But there has been nothing said there that is fundamentally going to shift the yen's future outlook. So this is either scaremongering, people panicking, or market manipulation, which will be undone. And for all we know, this could be the last push before the collapse. We just don't know, do we? But there's no reason for the yen to be screaming through the roof like that. Even if someone's come out and said something bearish, that's not going to have a fundamental impact on what the yen is going to do to inflate or deflate its currency moving forward. This is the market just reacting to a bloke standing up telling us what we already know. Highly likely we're going to get a fade on this today. Unfortunately, it's too late for my aggressive drawdown control position, which was stopped out up here. But there's another opportunity potentially to get in with a short now. So, I've worked over the years on EAs that trade not on candle close, but on what price does. It's folly because it works great in backtests and never works the same way in real life. That is true. The reason you should always use candle close is because candle close is a confirmation of price action, of strength or weakness. So, this is why these paint when the candle closes, and why, if you place a sell stop under there and it gets taken out, you've got potential for being whipsawed into a position which immediately goes into loss. If you wait for the candle to close below it, you've got a higher possibility of a trade working, but a worse entry. So there's pluses and minuses for everything to do with using on tick and on close, but on close obviously gives you confirmed price action. And the other thing about backtesting is, again, it is nothing to do with what's going to happen in the future at all, regardless of how you backtest. If you backtest on close or on tick, what's happened in the past has got nothing to do with the future at all. RSI extensions have just lit up. It's 10 o'clock. Big extensions across the board. Yens, even more extended. If you're not in any yens yet and you want to get into some, they are so put off the charts now. But yeah, I mean, backtesting, I've backtested many EAs and forward testing them. On my VPS at the moment, I've got 150 EAs in forward test that historically have been backtested for 15 years and produced amazing results. They're going to have losing years. They're going to have losing months. So when you're forward testing something, the problem everybody has when you forward test something is you get an amazing backtest for a year. And people have said this about the market reversal alerts EA. I've got amazing backtests. I've just stuck it on my chart and it's lost 12% or 15% or 20% or whatever it is. It's like, well, yeah, because the market didn't behave like it did for the last year this month. Why would you expect anything different? And that's the Ukraine wasn't invaded 2 months ago. Why should we have the same price action today that we did 2 months ago? No reason. We shouldn't. The Fed increases interest rates by 6% this year. Why on earth would we get the same movement on the US dollar this year as we did last year? Last year, we were in the grasp of COVID. This year, we're not. Next year, the Delta Omicron variant 6 is coming out, which is going to destroy the Chinese economy. Do you think the EA is going to perform the same way on the US dollar next year as it will this year and it did for the last 10 years? No. Data's no use to anybody. Like I said, we know that, and that. And I can guarantee you those three things will keep happening. They're the only constant in the market. Moving through price and up and down. Moving through time and up and down. And we just have to hit the button when we think, like now, short now. Looks like a really good trade. Stick a stop up there. You're either going to get stopped out for that much, 10 pips, and it could drop by 30, 40, 50 pips. It could collapse. You could get a 600 to 1 risk reward if you can hold it. You don't know what's going to happen, do you? You just got to get in the market. That's the rule. Bearish engulfing on the DAX, short one. We're just breaking back down below the highs. So we are at the moment sitting in the lows. We've got 2 minutes left on this candle. We look like we're selling off. starting to. Or is this a pullback to the 20 before bouncing? I don't know. But I do know we've put in the opening range high and we've just put in a lower high. The reason I'm getting into this trade, we've put in a lower high. So if this is high of day, we're going to start now to sell off. So it's a good risk reward. M on the 5 minute. Yeah. So stop loss just above that high. See if we can get another 1% out of this move. Full margin, easy, yeah. This is. I mean, I've like I said, if you want to really make some money really fast, you can do it in this market. If you hit short now, I've gone in with one lot short. If I went in with 10 lots short, as I have on my other account just then, that risk for me on my other account is $400. On this account, it's $60 or something like that. $35. So yeah, if you hit the short button now, and this thing, and let's say Russia suddenly releases a missile that is full of chemical weapons and it breaks on financial juice, yeah, and this thing just goes vroom, 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 and we put in the biggest down day you've ever seen in your life. You cancel that off and you hold it. Yeah, you could pay your mortgage off. Couldn't you? Well, I could on that 10 contract short. 10 lot short. You know, but sometimes you'll take it. It's lucky. You'll get lucky shots like I did yesterday when Powell started talking. He tanked the market for me. Thank you very much, Mr. Powell. But I had a set risk in place and I knew what my potential reward was going to be. It was way more. I got way more than I was expecting, which is great. But then I'll have days, as you've seen in here, where I'll make 2%, 3% losses. You just got to take the long term, average out long term, 5, 10, 15, 20% a month, whatever you need to make to pay the bills. That's really all you got to do. But that looks like a nice short. So the play here is basically, I'm looking, as I said on the DAX, I'm looking for a red to green day today. A green to red day today. So looking for that 14,300 level to get broken. And I'm looking for 14,000. Not necessarily today, but I'm looking to start making a move towards it, ideally. So hopefully we've just put in high of day, M pattern, close below there. Next target is to close below there. If we can close below there, look for pullback, short entries. But it could bounce off the 50 and go higher. Again, we don't know, do we? But that's what I'm playing at the moment. I'm playing the daily short back down to that gap, assuming I've got an opening range high. Got to assume something, haven't you? Otherwise, you've got no directional bias. So I'm going to let that one play out. There's been a lot of waffling this morning, so I don't know why I've got verbal diarrhea this morning, but people have been asking lots of good questions this morning, so it's always good. I'm going to leave it there. Anybody needs anything, I'll be in the Telegram group. I'll be back at 1 o'clock for the US Open. We'll see how this one plays out. You can see what I'm doing here. DAX shorting at the minute. It's either going to work or it's not. But I'm hoping that one will start to put some bearish price action in at the moment, but obviously we'll see. All these ADRs today with these yens, they're difficult to know what to do with them. We are obviously very, very, very weak on the yen. uncharacteristically weak. So we are putting in a lot of big ADR hits, and they're very, very, very tempting to short. So if you are going to short them, now is a good time. US dollar yen is probably the one I would not short, saying that the US dollar is probably going to tank today, and that's the one that will be short. But these Aussies, we're getting a lot of movement coming into them. So things like the CAD and the Swiss, although they're the least extended today, I think are probably the ones you're going to get less strength on. The Aussies and the New Zealands are pushing really hard. The US dollar I'm expecting to push hard. So I'd be more inclined to short those, although they're not quite as extended. But again, wait for reversal alerts on the lower time frames, get confirmed market structure breaks. And then when you've got those, obviously you're anticipating the M pattern formation drops. So they're all very extended. You can trade any of them, but obviously don't trade all of them because you'll get way too overexposed. If the yen suddenly weakens, they're all going to move at the same time. So take one or maybe two. But these look very extended. You know, we know they're extended. They've been extended for ages. They are now extended, all of them, above the 85 level on the RSI. Absolutely shot to pieces. And also on the hourlies. So, yeah, mean reversion opportunities, definitely. When they're going to stop, who knows? To me, it looks like the bottom of a range. Selling here is the bottom, plus sitting on the 20 of an upward trend. Yep, spot on. Yeah, so see, Diamond's just pointed out the fact that this is the bottom of a range, and we're sitting on 20 support in an uptrend. Tick, perfect. So the buyers will all be thinking as Diamond is thinking. The sellers will all be thinking as I'm thinking. I don't know who's right. Doesn't matter. Diamond's going to be right or I'm going to be right. What is important is that we make money out of it or we lose as little as possible. So if this thing now pushes down like that and Diamond's gone long, he'll get out. If it pushes down like that and I see a big bullish candle going, I might get out. If it pushes up into there, I might get out there. We don't know. But when you're in a trade, your job is now to manage your risk within that trade. So if this pushes down to here, I shall be hitting this button and moving my average, protecting my risk. So I'm of exactly the same opinion as you. This looks like a long bounce setup. But it also looks like a short M pattern setup. One of them's going to work, isn't it? I don't know which one. I'm going with a short one. I don't know. Take your pick. We're also setting an accumulation here as well. Trevor, will I be making an MT5 price action toolkit? I have tried and I keep getting bugs on it. I hate MT5 with a passion, and only 5% of the people that buy any of the indicators I sell are on MT5. And all the ones that are tradingderiv.com, synthetic indices, and they are losing their pants, which I don't agree with because they're manipulated by the brokers to make them money. So if I do make a price action toolkit for MT5, literally all I'm doing is taking people's money away from them, because when they start trying to use it, they will get ripped off. Honest opinion, it's 3/4 built and I haven't had time to finish it off. So yes, I'm working on it. But I haven't got a time scale. It's not a priority at the minute for me, unfortunately. MT4 is where it's at. And the MT5 version as well is so slow to execute for some reason. I don't know why. You know, there's just all these stupid little bugs creep in on MT5. It's really annoying. CAD-GM 125 ADR. Blimey. So I'm looking for an opportunity to get another aggressive drawdown control position on the CAD-Yen at some point today. This thing's really, really off the charts, isn't it? Crazy move. 89. We're going to crack 90. if this goes any higher. If we get up to 150 ADR today, this is going to be at 90. Yeah. See, look, that's the last time we were there. We're up at this level. And look at what we got. That is all we got. Then we pushed up and made 3 new highs before we got the profit take move, which was the profit take move of that. So this is what I'm looking for. Strong move, looking for the profit take. If you don't get the profit take now, you will get it at some point. Timing. Timed it there, wrong. Timed it there, wrong. Timed it there, wrong. Timed it wrong there. Timed it there, right. Yeah. Don't know when it's going to happen. It's going to happen. Just don't know. It could be this week, it could be next week, could be the week after. But at some point in the next few weeks, or next few days, or next few hours, I don't know. Some point, the yen is going to power up. Or the CAD is going to dramatically weaken. I don't know which. But you get my point. It's a good illustration, that. Maybe odds are on you being right. I don't know. I don't know. The odds are the same for both of us. That's the odds. Yeah? It's a binary thing. It can only go like that from there. I don't know which one. It's a 50-50 shot. You're right or I'm right. One of us is right. Hopefully it's me from a totally selfish perspective. But hopefully you'll get the next one. And as long as we've got a 2-to-1 risk reward, we both make money. There you go. It looks like I'm right at the moment. Just made a new low. Just. Still not convincing. But anyway. I'll leave it there, guys. Otherwise, I'm going to talk all day and we might as well just go straight into the New York session. It's 10:15. So I'll see you guys this afternoon at 1 o'clock. Anything you need, come in the Telegram group. Let me know. You might want to bookmark this one because I've waffled a lot of stuff in there, which might be worth watching again. But I'll be back at 1 o'clock and we'll trade the New York session this afternoon. See how this trade goes out. I'll update this one in the Telegram group. I'm probably going to look for maybe 0.5% on this. I'll see how price action goes. If we crack these lows considerably, i.e. if we can get a move down, break these lows, and then either accumulate down here or pull back and drop, I'll probably break even this and try and ride it. Might even add to it, but we'll see. At the moment, it's not looking particularly convincing. As I say, we're hugging the 20. So nothing much is happening, is it? So, all right. So I'll see you at 1 o'clock. Anything you need, let me know in the Telegram group. Otherwise, have a good afternoon or good morning rather, and I will see you for the New York session.